Hey folks, it looks like I am live. Let me know if anybody can hear me out there. If this is your first time on the channel, first time watching a live stream, gotta let you know, guys. I love doing live streams. It's not like I'm a professional or anything. It is highly entertaining, and I enjoy being here. And yeah, what's up, Ken? How you doing? It looks like you can hear me. So. If you guys have not checked out my Patreon at any point, my Patreon is called I call the basic membership the Brew Club, and I thought I'd start off today by talking about this beer that I'm drinking. It's Golden Road Wolf Pup Session IPA. I'm not being sponsored by them or anything like that. I just thought I'd pick it up, saw it at the grocery store. It's pretty good, I have to admit. I'm a big fan of the hazy and session IPAs. So background on a little story. I was a pre-IPO investor with Ballast Point Brewing. I didn't get in like super early, but like make. I know somebody that invested at $10,000 ended up walking away with about $1.2 million after the entire thing was done. I wasn't one of those guys, but I did get a chance to. This is the first investment that I was able to get into like pre-IPO at one of those like earlier rounds of funding. So it was the first time my personal wealth had reached that level. And it was successful. And ever since then, I've been interested in, ever since I had that first investment, I was interested in like really good beer. And investing in some way in the rise of microbreweries here in the US, my subsequent investments in that industry have not done quite so well, I'm going to admit. But yeah, anyway, folks, cheers. I'm going to adjust my camera here just a tiny bit. But anyway, this is a sort of session where you guys are free to ask me about anything regarding investing in a technological future. If you have financial planning questions, I'm here for you as well. As a certified financial planner, like I answer questions all day long on a wide variety of subjects. And Gary Adams says, Modelo? No, this is Wolf Pup Session IPA. It's by a company called Golden Road. And Shoeless Joe, Beer O'Clock. Yes, it is Beer O'Clock. Shoeless Joe, where are you from, man? You're a frequent commenter on my channel. Let me know there in the comments. And if you're out there watching, I encourage you to crack one open and have a beer too. But I got a couple of questions this week about what's going on with Lordstown Motors. What did I think about the short report? I really like short reports. Unlike a lot of people, I actually really like short reports because in a lot of cases, it points out maybe things that I'm not checking out myself, or it basically brings up things that I wouldn't necessarily cover myself or I wouldn't necessarily think about myself. And in this case, I have a few favorite short report writers. Bonitas is not one of those. The guy, Andrew Lemon, his also is not one of those. But Hindenburg has been one of my favorites for a while, but they're not always correct either. And in this case, I think when you look at the list of concerns, and I didn't get into all of them, but in particular, when they were criticizing the pre-orders, I didn't really find that criticism to be all that valuable. They're really kind of making a mountain out of a molehill here. So nobody really thinks that the million pre-orders for Tesla's Cybertruck are any more real than, say, the 100,000 pre-orders for the Lordstown's truck, right? These are all non-binding commitments where you put down 50 or $100, and if you buy the car, you get that back, and if you don't get it back. I don't know the specific details on the Lordstown deal, but as far as I could tell, they never advertise that as these are a binding contract or anything like that. So Nicholas Moran, hey, excellent. I'm glad you made it. You mentioned a couple of times that you missed the live streams. I made sure, actually, I was thinking about you when I published this like 9 hours ago, just to make sure that you showed up for this. But definitely. So so Lordstown is one of the things that's been on my mind for a while. Look, there's a lot of reasons to doubt whether or not Lordstown is going to be able to really produce a vehicle, do it well, and compete in the space. I'm telling you, I'm getting very excited at this point because we're having all of these companies that are coming out with trucks here pretty soon, including Canoe. Like I don't know why, but just the fact that Canoe came out with a new vehicle, which basically, if you're not familiar with their structure, like I'm far more interested in Canoe's subscription model than I am their modular vehicle model. But I've talked to a couple people in my Patreon group in the Brew Club, and they pointed out to me that there are a few things that are very interesting about the modular way that they're building vehicles, and I have to agree with them. I have to agree with them at this point that this is sort of an innovative way of building a vehicle, and they can just spin up a model pretty quickly, based on their skateboard platform. So I'm pretty impressed with that. But that, for some reason, that announcement triggered like interest in one of my videos that I put out like several months ago, and it's gone crazy since then. So I am thinking about probably doing a follow-up video on Canoe, but it's going to be more focused on sort of financial end. So. Yeah. So cheers, Jason and Joe. I don't know who Dan Sure is, but I hope you went. Oh, you went and grabbed a beer too. That's good. And Nathan, yes, Nathan, I am bullish on SoFi, and yes, fintech is a crowded space. The whole deal with fintech, though, Nathan, is it's not going to be a winner-take-all type of engagement. The financial markets are just too fractured for that. It's going to be a scramble to see who can grab the most of anywhere from 500 to 700 million accounts that are available out there, and who can grab the most from traditional banking. So nobody does quite what SoFi does. Nobody has the breadth of operations that SoFi does. So a lot of folks are either familiar with their loan program, or they're familiar with their trading app, or they're familiar with something else, but really their trading app and all of the other functionality, SoFi has just added in the last 24 months or so. And so some of it isn't very mature, and but they are operating in those space. Like 83% of their revenues right now come from their loan portfolio, but they're looking to add functionality after they go public by acquiring companies as well. But if you look at what they're doing now and the capabilities they have, they actually can compete with every other service that's out there. It's not that they're not competing well in certain spaces, but they can compete in every service. You can't say the same thing about the Cash App and Square. You can't say the same thing about Venmo. You can't say the same thing about PayPal, any of those, or any of the other, or Robinhood or anything. They don't have all of those specialties available. And they're even looking at getting into, they're already involved in real estate loans. They're already looking at some sort of cooperation with Open Door. This is just speculation that I was reading, but I know somebody who works for SoFi, and they say that they were someone presented an idea of some sort of cooperation with Open Door, and so I don't know if that's true or not. This was presented to me in sort of off the cuff manner over drinks. Over a Zoom meeting. So I don't know how real that is or how real that isn't. So about once a week, I get questions. I have a meeting with someone that I've never met before over Zoom that just requests a meeting via email, and I'll go on and see what they have to say if I have time to do it. And a lot of times it's pretty interesting, and I'll be honest with you, sometimes it's just crazy. It's the internet. You get crazy people all the time. So anyway, so I am extremely bullish on SoFi, really because of the breadth of their operations, but mostly because of the solid footing they're on financially already. They're going to be profitable by the end of the year. And this estimation of profitability doesn't even include any money that they could make from banking operations. And they just acquired a bank. They just got preliminary approval for their bank charter. So all of that looks like it's going through at this point. Shoeless Joe says, I am a big EV enthusiast, but it looks like the market is a bit flooded now. I'd look for an EV in a unique space. That's why I like Arrival. I like Arrival too. You guys probably have gathered from my channel that I'm extremely interested in manufacturing methods and smart manufacturing. I'm extremely interested in companies that simply do things differently. I like people who break the mold. I like, CEOs with. The other thing is I like CEOs that are nerds like me, that are very much into the technology and that aren't necessarily people with master's degrees or MBAs. I think that was one of the criticisms that Elon Musk made recently about the business world in general, is that too many companies are run by MBAs and not enough of them are run by people who know the technology and understand what they're building. So yeah, I do think that the EV space is flooded now. I did a video, I think it was back in October. It was called The Wild Wild East, where all I did is I talked while a list of 1,600 American auto companies that were started between 1900 and 1940, they all went out of business except one of them in that list. And that just goes to show you that investing in a technological revolution can be very, very tricky. You have one or two companies that kind of like pierce that veil and become, and get into public consciousness. And then, in a huge gold rush, everyone else jumps in to fill the space. And pretty soon you can satisfy every need that you have, but there's destructive competition in that space. This happens in every technological revolution. Electric vehicles aren't going to be any different. And somebody out there, and more than one person, there's going to be a lot of somebody big out there is going to be the AOL of the America Online of the auto industry. There's going to be some big player out there that everyone thinks is going to make it, that everyone thinks is going to dominate, that everyone thinks has this giant market share. There's going to be some company like that utterly fails, right? And I don't know who that's going to be. No one knows who that's going to be. If you were not an early investor in EVs like I was, and like many people listening to this were, I think now is a better time to consider an ETF in electric vehicles. Like, buy some Tesla by all means, but I would consider buying an ETF for everything else. You're just not going to be able to predict who the winners and the losers are from this point forward. And you never were. Like, all the EV companies before were definitely speculative risks. So Cheng Chao Chen says, hello, Jason. Thank you for sharing your knowledge. How do you compare battery technology by CATL versus BYD? So that's an interesting question. Like, CATL actually has a much broader recipe book for battery chemistries than BYD does. Somebody just recently gave me an article on the way BYD innovates too, which I haven't actually gotten a chance. I've read it, but I haven't gotten a chance to like really break it down. But CATL, in terms of their battery technology, they're not far ahead, but they're ahead of BYD in terms of their chemistries. And they have a wider array of things that they can do. So BYD seems to have taken this approach. So you don't always have to have the best of something to end up wiping everyone else off the face of the planet, right? So what they have is a battery that's good enough. It's about 14% less, or BYD has the Blade battery, which is about 14% less energy dense than a lot of other, top of the line lithium-ion chemistries out there, but it's extremely cheap to produce. It doesn't have any nickel, cobalt, or manganese in the cathodes. It just has lithium, iron, and phosphate, which are found everywhere. Basically, you can make these batteries anywhere on the planet. Your supply chain can be relatively short. Like I said, you're not gonna open up, phosphate mines in Europe. There might already be phosphate mines in Europe. I don't know, but they're opening up a factory right now. But I'm sure that some of what they're doing is going to be sourced from other places, the raw materials at least. But CATL, in terms of things like they're doing with solid state research, they're far ahead of BYD. So I'm actually thinking of CATL. I wish they were traded on U.S. markets. I think that would be a great. And I love the fact that you abbreviated it, because I can never pronounce Contemporary Amperex Technology Limited unless I do it very slowly. Thank you for abbreviating it. So inflation seems more and more likely with this massive printing of the dollar. What do you think? Nicholas says. So inflation is not always likely. It's part of the plan, Nicholas. So the plan is anywhere from 2 to 3% inflation every year. And historically, it's over the last 40 years or so, it's averaged about 2.76%. So I deal in financial planning, and we run like future projections of what people's retirements or investment plans are going to look like 20, 30, 40 years down the future. And our clients always forget to add in inflation, right? This is one of the things that they never consider is inflation, or they consider it's going to be just like it is now. Like, the difference between 2% inflation and 3% inflation is huge. The difference between 2% inflation and 4% inflation on a 30-year plan is massive. Am I concerned about it? Yes, I'm always concerned about inflation, because that's what I do for a living. But am I concerned about us having hyperinflation right now? No, for a couple of reasons. Number one is that the interest in buying U.S. securities has just been so high for so long. It's not because the U.S. economy is so great. It's really because everyone else is so terrible at one thing, which is paying their debts. The United States has never defaulted on its loans, right? In fact, the only time the United States has even talked about, since the World War of 1812, the only time the United States have talked about defaulting on its debts is when we had our last president in, and he just didn't understand. Like, he wanted to renegotiate U.S. debt. He didn't understand the scale of disaster that would be. So yeah, but a couple of things. So reserve requirements are being reimposed on banks at the end of this month. And I knew this had been done back in April of last year, and it kind of dropped off my radar, and I forgot about it. And surprisingly, Meet Kevin mentioned this in one of his videos, and someone passed it on to me, and I had forgotten completely about it. But a new reserve requirement is going to come online, and it looks like there's a couple of banks out there that are going to be caught out, a couple of really big banks that are going to be caught out cold, who are going to have to acquire more deposits, and they're going to have to, in order, what do you do to acquire deposits? You have to give people reason to put their money in your bank, and that usually means higher interest rates that you're paying on short-term CDs, loans, checking accounts, something like that. When you have reserve requirements at banks, that actually sucks money out of the economy, and a lot of people don't realize that. So I'm just going to give you an example in round numbers because it's easier to understand this way. Let's say for every $100 that you have in deposit at a bank, the bank is required to keep only $5 actually in the bank or at a Federal Reserve Bank on deposit. The other $95 is loaned out, right? So that requirement was taken away either at the end of March or the beginning of April last year. And so banks have had no deposit requirements since then, and no reserve requirements since then. And those reserve requirements are coming back to a degree at the end of March. And literally that sucks money out of the economy. And I don't think a lot of people understand how this, and put it this way, inflation is a lot more complex than simply printing money. There are a lot of ways with the click of a button that you can get rid of money also. So anyway, it's like I said, it's just a bit more complex, but this will have a large effect on calming down inflation. So Sheila Joe says, so far it's starting to look like a great opportunity. I think it's a great opportunity, Joe. I always say do your own due diligence, though. There are actually a number of UK companies that that were brought to my attention by investing with Jace. And he did a couple of, he either mentioned them or something, but I went and looked at them. And I think there's actually a couple of competitors there who are interesting as well. And there's a couple of Canadian competitors who are interested. So Viking fan says, hi, Jason. I just discovered your channel a few days ago. Which stocks do you like in the semiconductor space? So one of the stocks that I like in the semiconductor space, because it's actually also in the EV space, is BYD. BYD has their own semiconductor division, right? So I kind of made this point in a video a few months ago where so the shortage of semiconductors was known as early as like late October. We already knew that there was going to be a shortage of semiconductors. Because of the just-in-time supply chain management practices of North America and Europe, we are suffering because of that, right? So China, they're EV producers because they aren't able to command the sort of, because they weren't producing as many EVs, weren't producing as many cars that used semiconductors. They don't have the volume to be able to command the price structure that like large European and U.S. manufacturers do. So they didn't use a just-in-time ordering system. They ordered things whenever it was cheap, right? Which now that's worked out to their favor. From what I understand, Nio and Xpeng and a couple of other players in China, they had a stockpile of semiconductors that they had acquired the year before when it was really cheap, and now they're kind of running on those. BYD is not facing that problem. They make their own semiconductors. They make their own IGBTs, and they basically, everything that Tesla wants to do, BYD is already doing. They make solar panels. They make power management systems. They make stationary energy storage. They make their own semiconductors. They make their own batteries. They make their own cars, right? For the life of me, I don't understand why this company is not getting more press. And up until 2018, they actually sold more electric vehicles than anyone on the planet. So, yeah. Oh, guys, I wanted to remind you that the super chat features are on if you feel so inclined. And Viking fans, I'm really glad whenever someone who just finds my channel finds a live stream too. I like to answer questions. I don't always see everything. Rahman Kademi says, what is your thought on Vestas Vind Orsted? I'm not sure I know what you're talking about, Rahman. I'm sorry. Gary Adams says, are you investing in crypto or what's your take? So Gary, there's a big difference between speculating and investing. I'm not invested in crypto. If I'm going to invest in crypto, I tell you what I'm going to buy. I'm probably going to buy somebody like Coinbase or one of the apps that trades a lot or handles a lot of crypto transactions. So I own crypto, but is it an investment? Not so much. It's more of a giant speculation at this point. It's been a wild ride, but I don't have that much in it. So here's one of the things I'm more excited, more than the price of crypto going up. This is what excites me, is the wider adoption of crypto. The fact that it's being used more and more in transactions, and the fact that corporations are now buying it. The fact that you can now buy a Tesla, with cryptocurrency. This to me is far more exciting than cryptocurrency from Bitcoin going from $4,000 to $58,000 in the last year or so. That's far more exciting to me. I think that what it says about the decentralization of finance and democratization of transactions, I think that's a lot more exciting than simply crypto going up. So Blue Ink says, your experience is greatly appreciated. I'm one of those less than a year experienced investors, and I am all options trading. Please tell me what the odds are that we're going into a good correction. Well, we already got, the NASDAQ at least got into correction territory. Thank you, Nicholas. Thank you so much. So the NASDAQ got into correction territory relatively soon. I still think that there's a lot of stocks that are overvalued, and I still think that like right now, technology stocks just aren't anyone's favorite. Partially because it was just a giant run up last year, an irrationally great run up last year. And I've had a great time covering it. I've had a great time being invested in it. But I realize that a lot of people, like institutions and a lot of like older people that bought these stocks because they didn't think there were any other options last year. And a lot of people who don't want to be in stocks, period, have been forced on stocks because he had more than a decade of CD rates being under 5%. There's plenty of people out there that don't want to own a blue chip stock that pays a 1.7% dividend. They'd much rather have a CD that pays 3% every 6 months, right? And I know that sounds crazy, but there's tons of people that would rather be that way. If we see interest rates come up, we're going to see money come out of the stock market and go into in shorter term instruments for a couple of reasons. And right now we're also seeing a rotation away from higher risk stocks and into stocks that were on the S&P 500, dividend paying things. We're seeing all kinds of things. This is one of the things that kind of blew me away about the panic surrounding the bond surrounding bond yields. If yields have gone up, it's because prices have come down. If people are selling their bonds, right, and no one wants to buy them, that means there's money out there that's going to go somewhere. Where is it going to go? What choices do they have at this point? Are you going to buy real estate, which is also at an all-time high? Are you going to buy stocks, which is at an all-time high? Where's that money going to go? It's probably going to go in the stock market, but I think it's going to go into consumer discretionary sector. It's going to go into things like 3M, into Dow Chemical, into Procter & Gamble. It's going to go into those names we know that haven't been very popular. And honestly, people have been predicting this for a long time, but I think value is finally going to make a comeback. I can't believe I just said that. I've been hearing that for years from people and have been ignoring that, but finally, I think it's actually going to happen. So Nathan W says most actively managed mutual fund managers cannot beat the index funds in the long run. What about long-term retail investors like you? Is there statistics on us failing or beating? Oh, failing for sure. But Nathan, let me be honest here. 70% of my portfolio is in index funds. Not necessarily like the S&P 500 index funds. I tend to do a dividend growth index fund. I have some in DGRO and some in NOBL, which is Noble, and then the mid-cap, small cap version of that, and then an international small cap dividend growth fund. But I do a lot of dividend growth investing and less S&P 500 investing. I don't like the fact that the S&P 500 is dominated by 5 stocks. There's a lot of concentration of risk in those 5 stocks, and a lot of those are technology stocks, and I'm already heavily invested in technology. But my personal portfolio is invested mostly in index ETFs, because when it comes to the vast majority of your asset allocation, you will not beat the market, right? With the other 30% of my portfolio, I definitely swing for the fences. I've got some home runs and I've got some strikeouts. I mean, I've missed a couple of opportunities that in hindsight should be completely obvious. But I'll tell you, most actively managed mutual funds can't beat the index. I remember way back in the 1990s when, we believed the fantasy that a good manager was creating alpha, which is alpha would means that for a given amount of risk, you're achieving a little bit more return, right? So the first part of that problem is we had a hard time defining what alpha was. The second part of that problem is once we looked at the data, and because there was data out there, it was perfectly reasonable to believe that a good manager, and let's say a good large cap manager, could beat the S&P 500 index by selectively choosing really good stocks. It was perfectly reasonable to believe that because we didn't have the data to say it wasn't true. But when we look back at the data and look back at the managers, we realize that none of this is true. Nobody can beat the market consistently over time. And even if you got someone to beat the market for a 5-year period, and you can look at this, it's called the SPIVA persistence report. So if you were in the number one, 88% of all managers in any year usually don't beat their index, right? That's 88%. And number two, even if you're in the top half of your peer group, there's a 58% chance that you'll be in the bottom half of your peer group. If you're in the top half of your peer group in one 5-year period, in the next 5-year period, there's a 58% chance that you're going to be in the bottom half of your peer group. So what does that say? That you are in the top half of your peer group, but half of you that were in the top half of your peer group didn't even beat the index. And in the next 5-year period, you're basically guaranteed to be in the bottom half of your peer group. When it comes to anything other than like a technological revolution or small caps or something like that, it's not just that I don't believe you can beat the index over time. It's demonstrably provable that you can't beat the index over time. Okay. I realize this is not something that people want to hear. I don't know if you guys know what metacognition is, but like metacognition is when you sit around thinking about thinking, right? But humans do this a lot. As far as I know, we're the only animals that do this. But when humans do this, we think that we're right about things all the time when we're not, right? And it doesn't really help when somebody presents the evidence to us. I'm one of those rare people where if you present me evidence that I'm wrong, I'll be like, oh, I'm wrong. That sucks. And I'll move on, right? Most people resist that until they die, right? You can't, if they have an idea in their head that they're smart enough to beat the market, it doesn't matter how many times you demonstrated to them that it's incorrect. They're not going to believe it, right? So when I talk about index, or when I talk about technological investing and investing in individual stocks and things like that, a lot of times what I'm doing is having fun with my portfolio and with my money. Like the 70% that I have in my ETFs in my base portfolio, that's enough to carry me to retirement. That's enough to get me to the goalpost, which I could probably retire 5 years from now. I'll definitely be retired 10 years from now. But with the other 30%, I will fully admit that I'm swinging for the fences with that. And some of that swinging for the fences has basically gone into my base retirement portfolio and has guaranteed that I'm going to be able to retire at 55, right? There's almost zero chance that I won't retire by 55. And retirement for me looks like boat building in my backyard, going fishing every day, and making YouTube videos talking about stocks, right? Which, to be honest with you, is not a hell of a lot different than what I do right now. But yeah. So let me see here. Other than EV and SoFi, what other stocks do you own? I own quite a few stocks. I'm very much, what I'm probably going to buy more of this year, though, to be honest with you, is going to be fintech. I do think that the revolution in fintech is going to be quite a bit less spectacular than it has been with EVs, but I think it's going to be vast and widespread no matter what. The world of finance is changing, just like the internet changed the way we buy stuff. I mean, that's a bad example. But anyway, I think it's going to be just as big a revolution in some ways as the internet itself was. I think that finance 30 years from now will look nothing like it does today. Let me see. What do you think? What indexes do you think will end up higher by the end of 2021? King Mark G, I think all of them will. There's no reason to think that this is not going to be a good year, right? First of all, as Min Tran notes, thank you very much, Min Tran. But first of all, as Min Tran notes, everyone just got $1,400 of stimulus. I was reading some statistics on what people plan to do with that. and a surprising number of people plan to save it, which I'm old enough to remember the first time everyone got a stimulus. And I think 90% of the population had it spent within 30 days, right? And that was $600. I believe that was in 2001 or something. It was quite some time ago. Now that folks my age have been alive to get 4 or 5 stimulus checks, I'm seeing the rate of people saving that money go higher and higher and higher. So I don't necessarily observing thought. Okay, thank you, Nicola Reeland. Okay, I do. Like I said, I do a lot of reading and don't get a lot of criticism, but thank you. So the $1,400 stimulus. Where would I put that $1,400 stimulus? For right now, that is I'm not eligible for any of the stimulus, unfortunately. But if I were eligible for the stimulus this year, instead of swinging for the fences like I did last year, and put it this way, swinging for the fences for all of us paid off. This year, it's probably going to go into my regular retirement portfolio. I'm actually going to be starting another business this year too. Probably another martial arts academy, or maybe a CrossFit place or something. I haven't decided yet, but I'm probably going to do one of those, and that's where it'll probably go. Martin Cosano says, "What kind of boat are you building?" So right now, I'm building an 18-foot center console, but it's based on a Carolina Dory. I don't know if you know what that is. People on the West Coast out here are very liberal in a lot of ways, but incredibly conservative when it comes to boating and ocean technology and fishing technologies, things like that. They're so rooted in what they grew up with that they can't see that there are better ways to do things. But yeah, the Carolina Dory is just a very, very simple ply-on frame boat, and then that'll be done in the next month or so. And I'm immediately going to start building a Tolman Alaskan skiff. So anyway, Martin, thank you very much for bringing that up. Dan Schur says, "I've invested in Nvidia because I really believe they'll keep going. It's a long-term play. Is it a given that the stock price will go up if the company keeps growing?" Dan, there's no reason to think that at this point, I don't think there's a reason to think that Nvidia is not going to continue growing. Basically, if you look at Cathie Wood's 5 platforms of disruptive innovation, they are in or have a hand in every single one of those 5 platforms of disruptive innovation. And somebody's going to skewer me for not getting all of them correct. But look, next generation internet, they're right there. 5G, they're right there. I had someone blast me on the comments about how Nvidia is not involved in 5G, and I just did a quick Google search, and Nvidia right on their website shows how they're involved in 5G, and in genomics and AI research, in autonomous driving. There's Xpeng has adopted their architecture. Nio has adopted their architecture. Gaming, you look at cloud gaming, cloud storage. You look at it, you name it. Nvidia is positioned to do extremely, extremely well. It's not that I have faith in Nvidia. It's the fact that by the time all of this started, Nvidia was the only person around, the only company around who could do everything that needed to be done for these 5 platforms of disruptive innovation. It's a matter of incredible serendipity that all of this coincided right when they're the only company with all of those capabilities. So, yeah. So other companies are going to step in, but they're an exceptionally well-run company, and Or what is a sign the company's stock price will go up even though it keeps going? Well, from the whole market. Dan, I'm not sure I understood that. So Cranky Buzzard says $1,400 goes into my Roth. Yes, that's another thing that we should address here. It wasn't until I did the poll and you guys all responded, and I realized that a huge number of and this is not what I expected when I started a YouTube channel, I'll tell you that much, but a huge number of my subscribers have actually been investing for under 5 years, which I would assume that means a good deal of you are probably a lot younger than I am. One piece of advice I could give you right now is exploit that Roth IRA. Put money into that Roth IRA. The bottom line is this: once you put money into the Roth IRA, as long as you follow the rules about taking the money out, you're done paying taxes on it, and you're done paying taxes on all the growth. There really isn't a more powerful investment vehicle for middle-class folks than the Roth IRA. So put it this way: the traditional IRA, in the long run, really benefits the IRS and really benefits actually Medicare. I don't know if you guys knew that or not, because you won't be, most likely, if you're in a middle range tax bracket right now, which used to be 20%, now it's 22%, 2022, whatever it is, you're probably going to be in that tax bracket when you retire, because that tax bracket is so huge. It accounts for incomes between $70,000 and like $150,000, right? So you're probably going to be there when you retire. But think about this: if you keep deferring 25 or 20% on your taxes now, 25% on your taxes now on the $6,000 on your IRA, or $15,000 on your 401k, or $16,000 on your 401k put in there, when you start making withdrawals in retirement, that account's worth $2-3 million, and you're suddenly forced to take out $80,000, or was it $68,000 a year from it the day you turn 72, you can no longer control what tax bracket you're in. You may actually be in a higher tax bracket, which means that you may actually pay more for your Medicare too, your payments. So the IRS will end up actually collecting more money from you in the long run if you live for a long time from your IRA. And now that they've eliminated the stretch IRA rules, where your kids have to take the money out at least over 10 years, the IRA is really, it's a tax bomb, and it's a tax trap in a lot of ways for a lot of people. Consider using the Roth IRA. The IRS knows very well, because it hurts a little bit more upfront, that most people aren't going to use it, right? They offer the option, but they know that a lot of people aren't going to use it. They're going to settle for getting that deduction today rather than getting the reward later on. And really, folks, that's how you're successful in investing, and that's how you're successful in financial planning, is delayed gratification. Make a small sacrifice today for a greater reward tomorrow, right? So yeah, anyway, I'm glad you mentioned the Roth. I really wanted to jump on that. Doug B, thank you very much. Thank you so much for the super chat. I'm not sure. I know that's called super chat. I'm not sure what it's called when you guys send me money, but thank you. Yasmin Taya says, what do you think about SPACs? Yasmin, I think the SPAC is very useful, but here's a couple of problems that I have with the SPAC, right? It democratizes investment to a great deal. It reduces some of the expenses for companies going public, but here's what it really does. For the investment bankers who set this up, it offers them a risk-free way to make money, right? Because when the SPAC is created, they sell stock in it, right? People buy the stock, they put the money into some sort of like tax-free, not tax-free, they put this money in some sort of like guaranteed return vehicle or bond fund. They get a small amount of return on it. And when they're ready to go public, they get all that money back, right? And it's quite a bit more complex than that, but I'm not going to go into everything. I don't remember everything that I wrote for my video that I'm planning to do on stocks at some point. But basically, it's a great vehicle for investment bankers to make money on a risk-free manner and transfer all of that risk to investors, right? We're seeing some of that risk being transferred to investors in a big way right now with some of the stuff that's coming out with Lordstown Motors, some of the stuff that's coming out with a lot of other companies right now. And I can tell you, it's only going to get worse. There's going to be a lot of failures from what I call this like spectacular revolution. But there's going to be some winners too. Like I think that SoFi is going to do really, really well. Of course, I think that, I'm just having trouble thinking of a couple of other SPACs off the top of my head right now. But so Sheila Joe says, being a relatively new investor, I'm buying stocks, but not doing any puts or covered calls because I don't really understand that world. You think that's a bad strategy? I don't. Sheila's Joe, here's the one thing you need to realize about options before you buy or sell an option. 80% of options will expire without being exercised. 80%. That meaning you're not going to hit that strike price that makes sense for you to exercise them. So it's better to be the seller of covered calls or the seller of options than it is to be the buyer of an option, because it's likely going to expire. Now, depending on how young you are, Joe, if you're a young person, why should holding period really matter to you? I think you're a young person, Joe, but why should holding period really matter to you in terms of how long you hold a stock, right? I don't know in the UK what your capital gains regime is. I think that you guys pay regular income taxes on anything you make from stock sales, rather than having a preferred rate like we do in the United States for capital gains that are held for long term. But even if you do, though, just remember that covered. If you're buying puts to protect the downside of an investment, that put has a cost, and there's an 80% chance, relatively, that it's actually going to expire without being exercised. So, would I do that in certain cases? Yeah. I mean, I wish that I had bought puts on Tesla when it hit like $900 a share or something like that. But I really don't do a ton of. I'll sell some covered calls it's actually kind of problematic for me because of my profession to be involved in options trading too heavily or do any sort of short-term day trading. Martin Cosino says, I have quite a bit of Nio shares. Whoops, hold on. I have quite a bit of Nio shares, and I've been selling call options instead of selling shares altogether. Maybe this approach be shared with the viewers. Yes. Yeah, I mean, the only risk with selling call options is that the stock gets called away, which at that time you can just repurchase the stock, right? You might not lose a dime. My only problem with that is that you could be triggering an unwanted taxable event, especially if you're up 1,000%. If you put $100,000 in Nio last year, it's worth more than $1 million at this point, right? So you could be triggering, and it would be short-term gains for a lot of people. So you could be triggering unwanted taxable events. So Nicholas Morin says, is it worth it to buy gold? You know what? I'm probably the wrong person to ask that. Gold is another asset that I just simply cannot understand its value. You can't. Even from ancient times, you couldn't make a weapon out of it. It's too soft. You can't make tools out of it. It's too soft. It doesn't compound. It doesn't. But yet, people for thousands of years have thought it's valuable. It's never been. It's not valueless in any culture, as far as I know. And it has some industrial capacity or capabilities now. But to be honest with you, I don't understand the appeal of gold. I don't understand why it's worth anything more, why it's worth more than it should be worth based on its industrial value. So I'm the wrong person to ask for that. I actually worked for a company that at one point had the best performing mutual fund on the planet over a 10-year period, and it was a gold fund. And I had people left and right asking me, should I buy this gold fund? My answer was no. It was the best performer over the last 10 years. It's almost certainly going to be a crappy performer for the next 10 years. And that was correct, but I mean, that's not based on me being a genius. That's simply evidence. Oh man, I always massacre this name. Zbigniew Chapliki. I hope I got your name correct. I'm going to apologize for mastering it ahead. Do you think Nio is a good time to buy? Hell yes. Hell yes. So everyone has their own method for valuing stocks, right? And when I look at the fractured Chinese market here, hold on a second. When I look at the fractured Chinese EV market, and I look at the fact that there seems to be an effort to consolidate that market a little bit more than there was in the ICE market, right? The government seemed to take the position that when China was trying to break into the internal combustion engine market around the world, they seemed to take the position that more was simply better. The more companies you had, the better. They seem to not be doing that this time around. They're a little bit more selective about who they're supporting in this case. And they have this new entrepreneur class that didn't exist when all these auto companies started, right? And this was the second generation entrepreneur class. The first generation entrepreneur class, they were still raised in an actual communist environment. This new class of entrepreneurs didn't really experience communism like the older folks did, right? And they're never really inculcated in that. They weren't steeped in that culture. So it's a whole new crop of people making decisions. So I think that I did my own valuation on this, where I looked at how much market share is Nio going to grab, right? If you look at VW, which competes across pretty much all income classes, they have 14% of market share in China in all vehicles, and they have the largest market share. If you look at Nio just getting half of that market share, and I'm not just looking at half of current market share of say 20 million vehicles a year, I'm looking at more people being in the middle and upper class in China over the next 10 to 20 years. We're going to have a much larger middle class because of the industrialization that's still going on right now, and the capital investments they're making as a people in attracting talent, attracting business all over. You guys don't know about like Guangzhou's like Knowledge City and all of these other like purpose-built cities just for innovation. You should learn about it. This is why China is I don't want to say a threat, because we shouldn't be enemies with China. We're so much more alike than we are different in so many ways. But this is why, as a competitive force in the economy, they're doing so well. Is because they're investing in the future. They're investing in their future. They put their money where their mouth is. And anyway, so I ran a calculation based on what I think 7% of market share would be for Nio. even at 7% market share for Nio, I have them being worth roughly $280 to $300 a share in 10 years. So to me, yeah, you think $40 a share is expensive, $45 a share is expensive. It's ridiculously cheap. If I didn't already own so much Nio, I would probably buy more at this price. But I'll be honest with you, I haven't bought any Nio since it was about $33 a share, because at that point it was already 13-14% of my net worth. So I actually had to trim my position. But if I had less than that, I would buy at this point. It's yeah. So Cranky Buzzard says, I've been on the Roth forever, 68 now, and just keep it going. It's the best invention ever. Cranky Buzzard, you know what, man? If people want to know about the Roth, they should be asking you. Really, absolutely, because that is correct. It's one of the best inventions ever. It's been around since 1996. And ever since they came out with the sort of the backdoor Roth loophole in 2006, I've been getting all of my clients to do it too. And it's really paid off. And especially now that they eliminated those stretch IRA rules that are going to cause IRAs that you leave to your kids to be giant friggin' tax bombs. Let's be honest, that's a good problem to have. If your parents leave you an IRA that's big enough to be a tax bomb, that's a really good problem to have. But the Roth IRA is great for retirement. It's great for saving. It's great for trading too, because you can do all the short-term trading you want in it. Not that I do short-term trading, but a lot of you folks do. You can do all the short-term trading you want in it. It doesn't trigger any taxable events as long as it stays inside of the Roth. But it's also a great investment, or a great vehicle for estate planning too. It's one of the only ways you can pass retirement savings on to your kids tax-free. So Best Start says, what do you think about Xpeng? Best Start, I don't know if I was one of the first people to cover Xpeng, but I was one of the first people that I knew that covered Xpeng. And a lot of it had to do with the fact that my fascination with a circle of Chinese entrepreneurs, these guys that are in their late 40s, early 50s. And so I've done numerous videos on Xpeng. In a lot of ways, in terms of financial acumen, in terms of management of supply chain, in terms of their industrial build out and manufacturing capacity, they're far ahead of Nio. They're far ahead. Nio is still dependent, less so now that they announced that they're building a new factory, but they're still dependent on a state-owned manufacturer, and in some ways that's holding Nio back. And they're not in as good a condition financially. I will say that I think XPeng made a giant mistake with branding. I think Nio is a name that just carries so well across cultures, and that XPeng is going to be a hard sell outside of China. It really is. Even though it looks like a great car, I do know someone who in Guangzhou who owns who just recently bought a P7, and he said it's wonderful, but the guy's really enthusiastic about everything now. But yeah, I'm extremely enthusiastic about XPeng in the long term. My worry about them, though, is the fact that their name kind of sucks, man, and it's just really hard to take something with a name that's that bad and export it to the United States or to Europe. Like, I had a German guy tell me that the name BYD was just horrible in German, and it never even occurred to me. Or like the U.S. did with the Chevy Nova, trying to sell the Chevy Nova in Central America when Nova means doesn't go in Spanish. So yeah, let me see here. Fresh Shoeless Joe, thank you very much for the €5 or £5 is that. So my tip on options is buying the longest call option you can on your highest conviction stock, and only when it goes below your buy price. Actually, that's a decent tip, because the longest call option you can on your highest conviction stock, it actually is likely to be the least expensive, because it's the furthest out of the money. If there's already an 80% chance that your call option is going to expire without being exercised, you might as well go super long on that call option with something way out there in the chance that it does get better. Let me see here. P. Mitzi says ChargePoint. Man, I guess you haven't seen a couple of my live streams where I really kind of trashed on ChargePoint. But let me reiterate, though, it's not ChargePoint in general that I'm down on. It's the fact that the technological barriers to entry for charging are really super low. And they're going to be competing against anyone who can make electrical components here pretty soon. Everyone's going to get in on the game. So how do they make their money right now? They mostly make their money by selling the equipment, not by actually like charging cars. So you're going to see city utilities or municipal utilities get into charging here pretty soon. They're going to be serving the electrification of transport, and that's going to cut into what ChargePoint does. So ChargePoint is going to be reduced to to make a profit at least. They're going to be reduced to selling their units. The problem is every factory in China can make exactly what ChargePoint does for half the cost, and they can export it here. There are numerous manufacturers in the United States that can do the same thing. I just don't see them as a sort of like 10x proposition or 100x proposition here. I think that there's not a danger that they're going to go out of business. I think there's just a danger they're never going to perform the way we expect them to perform. John Ledesma says, Jason needs a Twitter. I don't need any more social media. And to be honest with you, I had to get off of Facebook pretty much because I'm kind of mean to people on Facebook. Let me see. Fresh Aquarium says, for example, I bought $30,000 in 2023 calls on export strike price of 60. I'm up 70%. If you're up 70% on those that are on those January calls, that are all, I would sell and just repurchase in a month. So I don't. If you're up 70% on options, I would definitely just sell at this point. But I'll tell you one thing, Fresh Aquariums, I'm not a frequent options trader. Typically, what I do is sell covered calls on my stocks. So I own a bunch of stocks that I bought a long time ago because I almost never sell anything, and those at this point are mostly just sort of your solid growth stocks like your Procter and Gamble's and your Walmarts and things like that. I'll sell covered calls on those all day long to generate income. Top Trader said, dude jewelry, bling bling gold. I have no idea what you're talking about, Top Trader. What is dude jewelry? What is that? Is that just like jewelry that dudes wear? The jewelry industry is a multi-billion-dollar industry. It is, Top Trader. It is. It's a multi-billion-dollar industry. But let me tell you something. I'm not aware of any jewelry stocks that have done really well. And in fact, I can take you back to the 2011, 2012 timeframe where there are a number of Chinese jewelry companies that went public via reverse merger here in the United States, ended up doing secondary offerings, raising a bunch of money and disappearing. And as it turned out, they were mostly just frauds. And even the ones that were legit ended up going out of business. They got put out of business by like the likes of Alibaba and things like that. So Top Trader loves Nio and USA, Tesla percentage. I'm not sure what that's trying to say other than the fact that you love Nio, Tesla, Churchill Capital, Lucid, and America. I think we can all get on that board. I love America. Let's see. Tony Lee says, I have Apple 127 call option expires 3/26/21. What happens if not exercised? So if you have a call option, is your call option, I don't know what the price is right now. So is your call option in the money? Are you able to exercise it? If you're able to exercise that option, you should exercise it and sell. So like I said, I'm not paying attention to the day-to-day price of Apple anymore because it's not a stock that I trade. It's one that I own through an ETF at this point. Can you comment on China's banning of Tesla for the military, et cetera, for individuals? Yes, I can. In fact, if you guys recall, I just spilled some of my beer, guys. Sorry. If you guys recall, in my very first video on Nio, I think it was either in my very first video on Nio or the second one, where I talked about what some of the dangers were for Tesla in China, and one of those was most distinctly that Sentry Mode is an incredible intelligence gathering tool. And if your Tesla can be hacked, or even if Tesla itself could be compromised into sending the data away, any of these cars that have self-driving mode, and especially Tesla's Sentry Mode, you could just park it inside of the military base. And the intelligence that you gather, it might seem innocuous, but you can tell who's coming and who's going based on who walks by your car. You can tell which facilities are used by which people, by what people, how frequently they're going there, and that would give you an idea of what type of work is being done there. So this is something that's been gamed out by people here. This is something, I live in a military town. This is something that's been gamed out by people already, and this was always a concern for me, is that there was going to be some kind of ban on Tesla. And look, it's a totally legitimate ban. When Nio's cars make it over here to the U.S., we're not going to let a U.S. general buy a Nio car and park it on base if he works at a sensitive facility or he works at Spay War or something like that. That's not going to happen. We're not going to let him do that, because that vehicle is an incredible intelligence gathering tool. And it doesn't even take anything special to make it an intelligence gathering tool. All of your cameras, your LiDAR, your millimeter wave radar, that's all on there, right? So yeah, I completely understand why they would ban military personnel from parking their Teslas on military property. The bigger question is how many military personnel in China can afford to buy Tesla? That's the bigger question. So this supports my red taping thesis with that I had in that video too, is that in order to mess with Tesla's business in China, China doesn't have to outright ban Tesla. They can just red tape the hell out of Tesla and make it very difficult for them to do business. And this is not something that's new. This is what 2,500-year-old bureaucratic governments do. This is the most complex bureaucratic system on the planet. They're masters at making things happen by not letting anything happen. So Nathan W. says, people try to avoid paying taxes on short-term capital gains by selling underperforming stocks at a loss. Is it really beneficial to do so? Well, they're doing something called tax loss harvesting, and it can be beneficial to do so. If you're a long-term investor, it's probably not beneficial to do this. But if you're trading on a short-term basis and you want to match gains with losses, if you don't have the conviction that that stock is going to come back, or at least not in the next 30 days, then selling that underperforming stock, realizing a loss, resting on it for 30 days before you get back in so you avoid the wash sale rule, that's a legitimate strategy. It's not one that it's one that my client, some of my wealthier clients who like to trade employ. It's not one that I employ personally. And I don't like it just because it creates a lot of work on my end. But yeah, so Top Trader says, I own Nio and Xpeng. Xpeng got my attention with the factories they build. Absolutely. And like I said, they're working on their third factory right now, which I think is awesome. See, Xpeng autonomous driving test. I did see that. Xpeng is just started what they're going to call the longest autonomous driving test that's ever been done. I think that's pretty good news. So Smart Design says, once Nio is in the Hong Kong market, it will be possible to transfer our positions from the U.S. market to Hong Kong one. Yeah, I don't know. So is it? So they are dead set on having a secondary IP in the Hong Kong market. Which, look, this is not a good thing for U.S. capital markets. It's a great thing in a way where it means that the Chinese market the capital markets are more mature. But it also means that our economies are going to be less tied together. I'd rather that we're more tied together, and where there's more reason for us to cooperate. We're much less likely to have actual serious conflicts if we're doing business with each other. So Tommy Flanagan says, question, what is in your glass? It is Golden Road Wolf Pup Session IPA. If you have not checked out my Patreon, you should. The first channel inside my Patreon is called the Brew Club, and that's sort of the base membership, is where we'll do a Zoom meeting every once in a while. You guys can share a beer with me, like on a live stream, but we also have a beer discussion in my Patreon too. We actually have a beer discussion. There we go. Okay, so yeah, so they are planning. It's not just Nio planning to go public on Hong Kong exchange. So BYD, they're traded on the Hong Kong exchange, and they're also traded on the Shanghai exchange. But they're going to spin off their semiconductor arm this year, and it looks like they've decided to do that on the Hong Kong exchange as well. To be honest with you, I was actually looking forward to them doing that here on a U.S. exchange. I thought that might happen because they're much more well-known now than they were 13 years ago when they first got involved with Warren Buffett. But it probably makes more sense to do that. And it's actually kind of exciting that their capital markets now can generate enough interest and enough money to make that an attractive option for a company like BYD that is, they're a global company with 220,000 employees and manufacturing facilities on 4 continents. So I think that's pretty amazing. So Martin says, thank you so much for all the time you put in your videos. Always have a great pleasure watching. Cheers. Thank you so much, Martin. It does take a lot of time to do those videos, guys. And sometimes I get discouraged when I'll work a lot on the video and people don't watch it or it's not liked. But I'm going to keep at it. I'm probably never going to stop doing this, even though it's, like I said, sometimes you get a little discouraged. Like last week, I was a little bit discouraged. I feel better, though, after doing a live stream. Yeah, so Fresh Aquarium says, if it ends below your strike price, it'll be worth nothing, then you'll lose all of your money. You'll lose what you paid for the option, right? So if you bought, let's say if you bought 6 call options on on IPOE like 2 months ago, and you paid $1,000 for it. Because it's dropped in price, those options are probably worthless right now. So the $1,000 you paid for those 6 call options in total would probably be gone. So yeah. Jonesy's take. So I just turned in. Sorry if you already asked questions about this, but what are your thoughts on Hyliion? So I've covered Hyliion a couple of times with videos. Those videos didn't get watched a lot, but Hyliion is actually a company that I like, partially because the owner, the CEO of Hyliion is just sort of the anti who was the head of Nikola? I can't remember his name now. But anyway, he's just sort of the opposite of that guy, just sort of a non-assuming guy who's actually an engineer who understands the technology that he's building. And I really, when Benitez Research came out with their short report, I think it was back in November, I really went through that and picked that apart. And it was absolutely nitpicky, and it was invalid criticism in a lot of ways. Look, Hyliion's got its issues, and Hyliion is going to face challenges. But I'll tell you, one of the things that they have, one of the advantages that they have is they're really tied into Dana. Dana is a manufacturer of truck parts that is pretty heavily involved in the trucking industry, and they're really heavily tied in with Dana right now. I will say also that I made a couple of miscalculations on how many of their hybrid vehicles they had out already. That's really just sort of a test technology out there. They don't have that many of those. Their Hypertruck ERX is supposed to come out this year. I do like the fact that it's a sort of a fuel agnostic type of version. It can be a hydrogen fuel cell vehicle. It can be a compressed natural gas vehicle, but it's an electric truck with a range extender in it. I do think that that's going to work. Here's the problem with the Tesla Semi right now. The Tesla Semi has about 500 miles of range. And I mean, I kind of had an idea that wasn't quite enough, but it wasn't until I talked to a trucker that I realized that it's 100 miles short. Now, granted, that 500 miles of range that the Tesla Semi has is with a full load of 80,000 pounds, right? That's what their tested range is. But even so, that doesn't give you a lot of window, even if you're not full. And a lot of what you're transporting in these trucks doesn't weigh 80,000 pounds. A lot of times it's high volume and lower weight. So you might be carting on 40,000 pounds of stuff, but it's taking up your entire truck. It doesn't increase your range necessarily up to that 600 miles, and 500 miles is just cutting it close. A trucker needs to make 600 miles a day to make money. This is what they have to do to make money. And so I do think that the Tesla truck is just kind of right there on the edge, and it's just the economics of that truck are not going to quite work out for guys that are in long haul trucking. So I do think there's going to be a window for some other type of truck that's out there. I think Hyliion could fill that space. I do think that PACCAR can fill that space. I do think that Dana actually has their own drive system that could fill that space as well. So Hyliion, though, I do think that I think they're going to end up licensing their technology to someone. They'll probably, if it really works, the Hypertruck is a great vehicle, and it really works the way they say it is. I think that they'll probably end up getting acquired by a major truck manufacturer, somebody like PACCAR. Yeah. Anyway, Daniel Winnick, message deleted. Blue Thunder says noobs. Okay, I don't know who you're commenting on. Okay. Michael Nevin says, do you know AITX? I'm sorry, I don't. So Fresh Aquarium says, it sounds like you think the banning of Teslas will be limited. It wasn't a more broad PR red taping act. No, it's not only that I think that the banning of Teslas was just limited. I think it is. I think it's perfectly legitimate, and we'll end up doing the same thing to Nio and Xpeng when they come. If you're in the military, or you work for a 3-letter agency, or you have a security clearance, you will not be allowed to park your car at work. You'll have to, and granted, in a lot of, maybe you guys know this or you don't, but in a lot of facilities anyway in the United States, if you have a security clearance and you work somewhere, you park pretty far away from where you work. That's just what you do, and it's arranged for security purposes. You park somewhere, and then you either take a shuttle or a bus to your workplace, or you walk a long distance, one of the two. Yeah, but so can you touch a little bit on 3D and PCBs? Yeah, so I'm beginning to lose interest in nano dimensions for a couple of reasons. Most of the news surrounding nano dimension right now is really about how much they're raising in secondary offerings. if you haven't noticed, rather sneakily, they have 4 other competitors now in their space who can make 3D printed circuit boards. They have their own patented dielectric ink, which is somewhat different. Now, granted, the Dragonfly certainly looks cooler than those other 3D printers, but I don't necessarily see them having this sort of power play position. So they need to do something with the amount of money they have. They need to go on. They need to acquire some of their competitors and take their market share with them. They need to start looking to be acquired. They need to start selling more of the products. They are simply not moving enough of their printers to justify their valuation at this point. That could change as the business environment improves. But when I'm looking at the size of their market, and I look at what this is really going to be used for is for fast prototyping and small run manufacture. And large run manufacture is not going to be done by 3D printing. It's just cheaper to do it in mass in the old way. Yeah, it's dirtier. It pollutes a little bit. It pollutes a lot more. But to be honest with you, it's just going to be faster and cheaper to do large runs. So you're looking at a technology that's going to be limited to prototyping and small runs, right? And there's going to be a big help. Even people that do circuit boards that require millions of them to be printed, they might still have one of these nano-dimension machines for their engineers to use in prototyping. But I don't believe that they're going to be as big as public expectations have suggested. So, and I know that puts me at odds with Cathie Wood. I think she's in love with the technology. I'm in love with it too. It's freaking awesome. But I'm looking at reality here is that they've already got people stepping in to fill that space out. And you can just Google a couple of names and go on and look at their technology and look at their capabilities. And there are differences in capabilities right now, but those are going to be ironed out over time. So let me see. Do you like any new plant-based meats and possible Beyond Meat burger? So I did a video a few months ago on the Beyond Meat, on Beyond Meats. My wife helped me out with that, by the way, and she was sorely disappointed that very few people watched that. So I gotta admit, I'm not a vegan or a vegetarian, and I absolutely love eating meat. I did like the Beyond Meat burger that I had, and the Beyond Meat, I make my own sausage, so I'm pretty critical when it comes to sausage. The Beyond Meat sausage was fair. But the Beyond Meat burger, to be honest with you, you're not necessarily eating a burger for the taste of beef, right? You're eating a burger because it's ground meat. You're throwing cheese on it and sauce and sriracha, mayo, whatever you're putting on there, and tons of vegetables, and you're eating it that way. So I do think that when the price of these plant-based meats comes to a price that's below that of ground beef, then it will slowly start replacing ground beef in our diets. Is it healthier? Not necessarily. The thing is, Beyond Meat is a manufactured item, meaning it's going to be subject to Wright's Law. For every cumulative doubling of production of Beyond Beef or Beyond Meat, you're going to see a reduction in the cost to produce that. And at some point, because it is a manufactured product, as long as they can get the demand for it, the cost, just like it did with like lithium batteries and the Model T, whatever, it's a manufactured product. And as the costs drop below that of beef, you're going to see widespread adoption of Beyond Meats or some sort of plant-based meat. I really believe that, partially because people think it's healthier for them, whether it is or not, that's up for grabs. And people think that it's more ethical, which I think that it is. In terms of healthier, probably not. So let me see. Nitin Patel says, any comments on CLVS? Spell out the name of the company for me. Yeah. Any thoughts on TTD and Twilio? I haven't actually, so they're not on my radar right now, so I haven't looked into them. That's one of the things I'm going to be looking at. Ever heard of LCKO, Luokong? I did. I looked at that, and to be honest with you, I didn't understand the giant run-up in price. It's not justified by sales at this point. So I want to look into that more before I comment on that. But yeah, I have looked into them. There was some odd price action that kind of mystified me there. So have you seen Nio truck with Incept technology? I have not seen the truck yet. In fact, I was doing actual work this week and was not able to keep up with Nio news. So wait, hold on. Let me see. So yeah, I wasn't able to keep up with a lot of news. Axbosso Boomex says, I'm thinking about putting 100% of my portfolio on Palantir and take a break. I hope you're joking. So I hope you're joking. Don't put 100% of your portfolio in anything. So back in 2000, I worked as a contractor for Enron. And I could tell you all of the 50-year-old men that I saw break into tears when they realized that their entire retirement portfolio was going away. And I learned, and thankfully, I didn't have to learn that lesson the hard way, but I got to see it play out all over again with Washington Mutual back in 2008, where I knew a number of people that had 100% of their portfolio in Washington Mutual because they worked there. And they thought that they would be taken care of no matter what. I'm talking $600,000, $800,000 evaporated and was gone. So, if you only have $10,000 to stick into your portfolio and it's all going to go into Palantir, hey, maybe that's not a bad idea. Swing for the fences, right? But if you have actual, a retirement portfolio of more than $100,000 or so, that's not a path that I would recommend. I would definitely recommend that you diversify. So Sheila's Joe says, do you think Xpeng or even Li Auto could actually do better than Nio in the long term because they occupy a more affordable space for the consumer? So it depends on what you mean by doing better. So one of the reasons that Tesla is doing so well right now is because their margins actually look so good, right? I know they're spending all their money building out new factories and on research, but their margins look so good right now. Margins actually are actually a little bit better in that higher end of the car market, and which is one of the reasons why that's where you're seeing most of these EV stocks start is in that higher end, where cars are necessarily more expensive, but margins are also higher because you're also paying for style and intangible things. But especially in China, their market that could, in the next 10 years, there could be 300 million people that could afford a P7. Right? They're not 300 million people now that can afford a P7, but in the next 10 years, 300 million people in China could possibly afford a P7. So I honestly believe that Xpeng could do very, very well. I think that Li Auto could do very, very well. Right now, they're not competing against each other, right? They're occupying spaces that are a little bit outside of each other's group, but sooner or later, they're going to step in and start competing against each other. Let me see here. Bassam Nath says, the financials of BYD are good. Why is the stock only at $23? So first of all, Bassam, that depends on what you're looking at. Are you looking at BYDDY or BYDDF? One of them is the H share, and one of them is the ADR. I think the ADR is going to be 4 or 6 times whatever that $23 per share is. So, like I said, I don't look at prices of anything even on a weekly basis. Invest with Jace. If you guys don't know him, he's got a channel too where he talks about investing. Go check out his channel at some point and subscribe. He's a good dude. He's a good dude, man. Check out his channels. It's 12:30 there. He's gonna catch up on this tomorrow. All right, man. Jace, when are you gonna do a live stream? And then I'll get up in the middle of the morning and watch your live stream. Let me see. Nathan W says, thanks for sharing your knowledge. What are your thoughts on PCAOB and Chinese stock? PCAOB? What do you mean by PCAOB? And Chinese stocks. So be careful with your Chinese stocks, guys. And like I said, I was here I was working as a professional when we went through basically the China hustle back in the 2011, 2012 timeframe, where most of the companies that went public, the Chinese companies that went public, ended up actually failing or being frauds. So not just that they're failing. I mean, look, the average lifetime of any publicly traded stock on any U.S. exchange is only 7 years. And the most common return of any stock over its lifetime is a 100% loss. So actually, there's a guy named Henrik Bessembinder who wrote a study back in 2018 called "Do Treasuries Outperform Stocks?" And it's a ridiculously titled study. But he's a professor of economics or finance at the University of Arizona. But he wrote out an exhaustive detail with all of the data, all of the reasons that stock picking is a bad idea for most people. And a lot of it has to do with how few stocks are actually responsible for almost all of the market gains over the last 100 years. And he went all the way back to like 1926 or something like that. Something like 4% of all stocks, of all 26,000 stocks that were traded on U.S. exchanges in that time period, only 4% of all stocks were responsible for like 56% of the gains. So it's very, very difficult in order to do that. So so and I don't know how I got on that, but when it comes to Chinese stocks, though, most of the stocks didn't just fail. So they weren't just fitting into that model because they failed. Most of those Chinese stocks that came to the markets, mostly by reverse merger, they were frauds. I mean, companies that claim to have like industrial grinding materials, companies that claim to own contracts to do advertising on buses, and companies that claim like Longway Petroleum that claim that they had petroleum or petrol stations all over China. These were all frauds. Every single one of them were frauds. So be careful. Things have changed. They're not able to go public in that manner anymore. So why did hybrids flop in the U.S.? I thought they were a good idea to solve some of the short-range issues with batteries. All right, hold on just a second. A couple of reasons why they flop. Number one, the average price of a car in the United States today is like $36,000. So if you think about it, the Tesla Model 3 is in a class of vehicles where they're not really that far. They're not much more price, or they're not much higher priced than any other car, than the average price car. And when you compare them to say like a Toyota Camry, which, look guys, you're not going to compare a Tesla Model 3 to a brand new Mercedes or brand new BMW. I know people like to, but look, with panel gaps and things rattling and screens breaking all the time on Tesla, I love Tesla. Don't get me wrong. I'm going to buy a Tesla Cybertruck. I owe it to the company to buy them a Tesla Cybertruck. But look, you can't compare the craftsmanship in a BMW, even though they're in that same price range, to a Tesla. A Tesla really compares better to like a Toyota Camry in a lot of ways. So the average price of a Toyota Camry is roughly about $36,000 or something like that too, when you put in all of the features that people normally get in there. So, but the problem is like that's not what the average person is buying. The average person is buying the friggin' Corolla, right, at $27,000 or something like that. They were never able to get the price of those low enough, right? So they didn't take what they should have done. What Tesla did, which was target that high end market of like gadget geeks like myself. And I got in trouble for saying this, but I'm going to say it again. People who virtue signalers who just want to drive an electric car because it says something about their personality, or like me, I want to drive an electric car just because I want to do it for free. I got solar, I got an electric car. That's one more oligarchy that I don't have to deal with, right? Which is the electrical oligarchy. So it is a number of different reasons, but the main thing I think was about cost and the fact that you couldn't draw a straight line between what you were saving in gas and the total cost of ownership. Like the total cost of ownership for a Tesla Model 3 right now, the base model, is lower than it is for a Toyota Camry. You're only spending about $6,000 to $7,000 more upfront, but over the lifetime of the vehicle, you're going to spend about $10,000, $15,000 less. So I think that calculation is not something that a lot of people do, but it's a lot of like fleets and things like that are doing that. So like there's a reason why you didn't see every rental car company go to the hybrid model, and that's because over the lifetime of the vehicle, it was actually more expensive to own that hybrid. So BYD is at only $23 a share in their financial. Oh, we already covered that. All right. Bing Wang says, wow. All right. Michael Navin says, if the future is all electric, how many gas stations are going to invest in hydrogen tanks? Yeah, you know what? If you look at, so number one, I don't think there's going to be a future where I think there's 43 or 44 hydrogen refueling stations here in California, which means, and I think there's only like 100 of them nationwide, and 40 of them are here in California, right? I don't see that happening. There's a lot more that goes into storing hydrogen because everything has to be kept under pressure and at the right temperature. I think there's a lot more doing that. I don't think we're going to see that. Like when you looked at what Nicola was talking about in terms of building out a nationwide infrastructure, they didn't do any of that work originally. They took what was already done for compressed natural gas, which is about 700 stations along major trucking routes, and they just reimposed hydrogen over that. Like none of that was original. That's all they did in that case. I could see that happening for a long haul trucking environment on certain routes, and I can see that happening for maritime shipping. I do think there's a real, true, viable window for hydrogen when it comes to maritime shipping. I was talking to someone who's pretty convinced that it's going to happen with airplanes as well. I'm less convinced about that. So gas stations will invest in being charging stations. So even if that's the case, Tommy Flanagan, even if gas stations will invest in being charging stations, we're still going to need only a fraction of the amount of gas stations that we have right now, because roughly 64% of people in the United States have access to their own charging right now, right? Meaning these are people that either own their own home or live in an apartment building or a condo or something where they could charge their own car. And not only that, I think that in future builds, everything's going to be built out with charging in mind, right? So I think a gas station at this point would actually be a really poor long-term investment, no matter what. I think that, some of those stations are going to make that successful transition from being a gas station to being an electrical charging station. And I think that the vast majority, like 60 to 75% of gas stations are actually going to go out of business. So gas stations don't make a lot of money on gas anyway. They make their money by selling you potato chips and soda. And they only sell you potato chips and soda because you have to stop in and get gasoline, and then you buy the potato chip and soda with an impulse buy, right? Because the margin that they're making on gasoline is really low. So you take away let's say you take away 50% of that need to stop at a gas station because you could just charge at home. Or like me, like I work from home during the day and then I go to my gym at night at the academy. So like I'm able to charge for free all day at home with solar power. I will never need to see a charging station unless I decide to drive cross country in my electric vehicle, which I may drive 300 miles in my electric vehicle. I'm never going to drive more than that. I'll just fly, right? So I think that very few of those gas stations are going to make it into being charging stations. And Bing Wang says there'll be no more gasoline in the future. I don't know about that, Bing. So I think there's always going to be gasoline around for some reason. Number one, there's been a couple of attempts to replace the outboard engine with an electric engine for boats, and that hasn't happened. Look at the industry floated with inboard diesel engines for a while, like small inboard diesel engines and a couple of other things. And now everything's back to the gasoline-powered outboard motor. That's actually really efficient compared to what it was 20 years ago. But anyway, I think that it's still going to, and there's going to be a few other applications too for it. We'll see. Maybe there will be no gasoline, but I always think there's going to be a little bit. BYD doesn't have the sex appeal to be blunt or the DNA of ultra forefront stuff. Their advantages, battery manufacturing and such. Fresh aquariums, that's really a matter of perception at this front. It's really kind of different to say that a company that actually produces their own all of their own technologies for the car, meaning including the actual chips behind it, and now they're getting into the software game, and they partnered with Xiaomi and they partnered with Didi for autonomous driving. I really think that it's a matter of public perception. The BYD Han is every bit the car that the Xpeng P7 is, every bit. And I've looked at a number of different reviews, and in a lot of ways, it's actually a fine vehicle that compares really, really well to the P7. They don't have, and if you look at, I think that was there other car, the Tang actually compares really well to the Li 1 too. So really, I think that it's a matter of press bias. The information that we are getting is biased compared to what they're doing. So Xpeng was a smart car, for example. A lot of So if you looked at my video on BYD that I did, I think on Friday. So BYD is actually producing a purpose-built car for ride sharing right now, and they partner with Didi. So both the passenger and the vehicle, like the vehicle's all set up for both the passenger and the vehicle to be set up for to use Didi's ride-hailing service, and the car comes with a driver assist program, mapping, or the car actually like drives for you, stays in lanes, and it's being set up for autonomous driving as well. So they're very much cutting edge in a way that's just not getting press. In fact, they're the only people on the planet right now that are building a purpose-built vehicle for ride-hailing. They're very much cutting edge. So is IPOE SoFi hold through the ticker change? I have 12. Yeah, so I'm holding it for 10 years. This is how convinced I am and how much conviction I have that IPOE is going to be a big player. Like I'm thinking that their price probably within the next 3 years would approach the $130 range and revenues close to the $10, $12 million range. And I think that long term, I'm sorry, that was my 3 years or so. I think 5 years or so, we're looking at a price of north of $200. And revenue is much higher than that. But look, these are just my own projections here. Take that with a grain of salt, like you should any analyst projection. It's really just hocus pocus and magic. A lot of it has to do with predicting the future, and humans are notoriously bad at predicting the future. So, are you invested in any battery material shares? Not directly. I'm not directly invested in any battery material shares. I do have a green technology ETF that I own that has a lot of that stuff in there. And you'd be surprised how much of the battery material shares you own just by having an S&P 500 fund. Michael Navin says, I feel like tractors and semis will replenish hydrogen at plants and warehouses only. So maybe tractor semis will replenish warehouses only. I doubt that, Michael, because here's the thing. A couple of things that need to happen. Like, number one, you couldn't have it at every warehouse and every plant. In fact, for safety reasons, you can't have certain types of chemistries near each other and certain types of industries near each other. But having the cooling, liquefaction, compression, and the electrolysis all being done somewhere, and if you don't have that somewhere, you have to transport it somewhere, and you have to transport it in the tank somewhere. You can't pipe it in. Like, that's what a lot of people think, is that you can just reuse the natural gas infrastructure to pipe in hydrogen. You can't do that. Hydrogen H2 is a much smaller molecule than natural gas is, and you're going to lose so much of it trying to pipe it that it's just not going to be worth it. But no, like I said, I don't know what the future for a hydrogen economy looks like. I mean, and I've made this clear. I love the idea of a hydrogen economy. I wish we had switched to it 40 years ago, right around, when it was first proposed in the early 1970s. If we had switched to that model back then, the world would be in a much better place, especially now with solar power. Can you imagine solar-powered electrolysis stations all over the United States producing hydrogen? And basically, I mean, you're not able to give it away for free, but after a while, it would be lower than the cost of gasoline, with far less in the way of control by large corporations. I mean, there's nothing stopping you from building your own solar-powered electrolysis station if you have the room to put solar panels at your house. So let me see here. What do you think of ARK's $4,000 price point on Tesla? So I just saw that in a video, and I didn't actually watch the video or read the article. I don't know what the time period is on that $4,000 price target. Like I said, my price targets, their price targets, you really shouldn't take them all that seriously. That's based on when they think Tesla is going to be fully valued. So I can tell you one thing, that I'm planning on a $4,000 $4,000 Tesla shares at some point. I just think that's going to happen 10 years from now, right? And I plan to be invested in Tesla for 10 years. Let me see here. Just as a reminder, guys, because I haven't reminded you guys in a while, those super chat features are on. If you feel so inclined, I would much appreciate it. Who else asked about ARK? Any thoughts on ARK selling Facebook? I can't remember which channel said that Facebook is undervalued. So remember, a lot of times Kathy Wood sells around a position she wants to be in long term. So last year, even during the run-up, she sold Tesla a couple of times at opportune moments in order to generate, alpha on top of the actual return of the stock if it were held over that same time period. I'm not saying that's what she's doing now, but you can't read a long-term strategy into every trade she does, because sometimes it's just to execute on a short-term strategy. And if you're trying to chase her returns or chase her strategy, you're going to lose in that respect. She's moving the market when she does things. By the time you hear about it, even if it's just posted at the end of the day and you try and follow her trade the next day, you're probably not going to do that. So, Jonesy's take, Romeo Power technology. Yeah, man. Actually, this is something that I've been looking into for a while. Somebody who comments frequently on the channel asked me to do it. I am liking what I see with Romeo Power technology right now. I am really liking what I see for a couple of reasons. They're led by a group of engineers. not MBAs, people that really understand the products and really understand the technology. They have a sort of chemistry agnostic philosophy, meaning they're not married to any strategy or any particular cathode or anode chemistry. They're willing to take a chance and build anything and experiment. And they're actually taking orders to do wildly disparate technologies at this point. So I haven't finished the video yet. I mean, I there's so much going on with all of the stuff that I research for this channel, that it takes me a while to do a video, just because I want to make sure that I'm not repeating something that someone else says that they just heard from someone else. And so I don't watch YouTube videos to find out any of my information. I usually go out and research things in articles, scientific papers, white papers, academic articles, that sort of thing. And I'll watch YouTube videos occasionally, but that's not how I'm doing my videos. Romeo Power technology, though, I will have to say that I'm pretty impressed by what I've seen so far. Nicholas says, why are Nio stocks following the NASDAQ up, down, and while Nio is not even in the NASDAQ? I don't know. I haven't actually looked at the at Nio's beta, so I don't know that that's actually true. So I'm not saying that it's not. I'm saying I don't know to what degree that's true. So take a look at their beta and let me know. I would expect that they're probably quite a bit more volatile than the NASDAQ is. So any due diligence on Jinko Solar? So I've owned Jinko for a long time. It's a long-term buy and hold for me. I bought it years ago. I may have even bought this like 10 years ago. I don't know. Were they public back then? I can't really remember. But I've owned them for a long time, and I still have complete confidence in them. What blows me away, though, is like these guys haven't been able to grab more market share, right? Nobody's really been able to become truly dominant in that space. So the PCAOB is a nonprofit organization appointed by Congress to oversee the audits of public companies. To protect investors. Chinese companies by law don't allow foreign entities to audit their companies. So there's already a workaround for that. Nio's already said that there's going to be a workaround for that. They're basically just going to hire a Chinese company to do that audit in China. So and they're going to satisfy it that way. And look, that's going to happen. These things are resolved around a negotiating table, right? They're not going to be resolved by making threats to each other. And I think it's a good thing, though, to let them be audited. This is good for everyone. It's good for American investors. It's good for Chinese investors. It's good for trust, between our countries. I think it's great. So when you think about a big European car manufacturer like Volkswagen developing EVs, how competitive will they be against Tesla? How competitive will they be against Tesla? Extremely competitive against Tesla, and especially in Tesla's largest new market, which is China. VW already has great brand recognition in China. They are the largest selling brand of any brand in all of China, and they hold about 14% of market share. Now, not only that, the ID3 and the ID4 are perfectly adequate vehicles. Are they better than a Tesla? In some ways, they are better than a Tesla. Like the outer construction is better than a Tesla, but the battery technology is not. The motors are not. The software is quite a bit weaker. But other things regarding like fit and finish and what makes it kind of a luxury car, it's actually a lot better than a Tesla. So, but it's not just that. It's the great brand recognition that they have in China that's gonna give them their first big shot of sales. And not only that, they're going to do really, really well in Europe too. Tesla is not doing as well in Europe as I had hoped they would. So you see here, any thoughts on MP Materials, an American rare earth minerals company? This is another one where I'm not really sure why people are so excited about this company, right? This is, when it comes to like mining materials, this is someone that I'm going to ask someone that I would know that is in mining, because a lot of times you're looking at investing in a mining company, you are invested in the leases that they have or the mineral rights that they own that they haven't exploited yet. And I don't even know how to value those at this point. So, and rare earth and minerals, let's be clear. When you talk about rare earth minerals, are you talking about actual rare earth minerals, or are you talking about lithium? Because lithium is not a rare earth mineral. Like the lanthanides are like 17 distinct elements that are called rare earth metals that really aren't all that rare. In fact, they're not even as close to being rare as like precious metals are. But if that's what you're talking about, like I said, it's actually hard for me to value one of those companies. John Jones. Oh, is this like the John Jones? Like the MMA fighter? No, it's spelled differently. Okay. John Jones says, thank you for the videos, Jason. You really know your stuff. Any thoughts on, yeah, we just covered that with Kathy Wood's price prediction with Tesla. Like I said, I didn't know the time frame on that, but $4,000 for me is what I'm planning on, but maybe a decade from now. So Michael Nevin says, so the best charging station would be at a restaurant. Michael, I think that's absolutely correct. I think that most shopping centers and restaurants are going to have charging stations in the future. And I think a lot of it's going to be free. And I think it's going to be that way to attract you, at least at first. I think a lot of it will be free, and it's going to be there to attract you to come and shop there. Yeah. So Michael Nevins is a good point. Blink is signing contracts with MOUs and hospitals and other businesses, so I've read. Yeah, so Blink is, yeah. Thanks always do pretty hard. James Bond says, I'm interested in your asset allocation. Do you hold only tech, growth, and EV stocks? I know you hold a small amount of Bitcoin, any gold or mining stocks. So I don't hold any gold or mining stocks. What I own was the USAA Gold Fund, and that's a mutual fund of small cap gold producers, and I've owned that for a very, very long time, like close to 20 years. So Holistic Hottie says, what do you think about Nio, not Nio? Nio, is that the company that makes like electric scooters or bikes or something like that? I think I looked at them very briefly. I don't have much of an opinion on them. I wasn't able to find a lot of information that wasn't very salesy on them. So I'll probably go back and look at them again. But honestly, the only thing I was able to find on them was stuff from other YouTubers, which was way too hyped for me to get actual good information out of. And some stuff, like I said, was very salesy. So I know you really like IPO and any other SPACs you're worth researching. Thanks for doing. You know what, Claire? I'm gonna get back to you on that. I'm gonna do a review of SPACs. Like I'll tell you the one SPAC that I'm losing interest in very quickly, and that is CCIV, Churchill Capital, and Lucid. Look, I want Lucid to be successful. I really do. I want Tesla to have competition. I think that's better for all of us consumers. And I want to see a robust electric vehicle industry. And look, part of the reason, and this is a terrible thing to say, but part of the reason that I want to see EVs be successful and I want to see the oil industry dismantled is not because I think that the oil industry is evil. It's not. I grew up, I had my first high-paying job with the oil industry. I saw lots of friends who work in the oil industry. But part of it is just like, you ever seen like monkeys watch a campfire or humans watch a train wreck? This is fascinating to me to watch to a certain degree, that we're getting to see a revolution firsthand happen. Like this is more impactful than the internet was in so many ways. Like look how the internet changed everything about our lives. Like the electric energy storage revolution, which includes electric vehicles and energy storage, is going to change everything about the energy wars that we've suffered now for a century, and the energy oligarchy that's been controlling our politics and our lives, either consciously or subconsciously, for a very long time. So if you ask me, if I'm excited about this, I'm extremely excited about everything that's going on. So I don't know how I got off on that tangent. Maybe it's the couple of beers I've been drinking here, but I'll be looking at more stocks. So Michael, lithium is doing well. Copper is looking good too. Copper is looking good. I did a video on lithium where I talked about where all the lithium is gone, and what I really meant by that, when all of the easily exploitable lithium is gone. I'm actually looking at alternative battery chemistries as well, including sodium-ion batteries and potassium-ion batteries as well. So let me see here. I saw one on my street in Brooklyn. You're talking about a Nio scooter? That's pretty cool, man. I haven't seen one of those. So I haven't seen one of those around at all. I keep seeing those bird scooters everywhere, though. Or not birds. I don't know. Anyway, San Diego, because it's a tourist town, at one point before the pandemic, you couldn't walk 5 feet without tripping over a bird scooter. So Tommy Flanagan says, I never heard that NP is backed by Bill Gates. I think you're talking about QuantumScape. Yeah, QuantumScape. Guys, I know we've talked about QuantumScape here at the time. Look, I'm not saying QuantumScape is BS. I'm not saying that the company is worthless. I'm saying that it's extremely early to take a position in QuantumScape. This company is probably at best another 3 years away from any revenues, 5 years away from significant revenues, and at least 8 to 10 years away from volume production and profits, right? This is a long-term investment, and I'm not going to touch it. I'm probably not going to touch it unless it's sub $15 a share, and I have $1,500 that I don't really care about losing, right? I think that there are actually better funded companies like CATL, Prologium, with larger manufacturing facilities, with deep connections to industries everywhere that are going to do very, very well. Investing with Jason, I thought you were going home. I thought you were going to sleep, buddy. I thought you were going to sleep. It's like 12:30, 1 o'clock your time. All right. PLL for lithium. I think that investing in a lithium miner is a good long-term play. I really do. Sooner or later, there's going to be, and that's like I said, that's as long as lithium is the dominant battery chemistry out there. Sodium and potassium could compete in a lot of different spaces. JW says, we like your tangents, drink another beer. I only brought 2 up here for that very reason, Jay. All right, Jay. So Investor Jay says, Ethereum or Bitcoin. Looks like Bitcoin. And like I said, not because of what the price is doing, but because of the wider adoption of Bitcoin in transactions. Yeah. So Doug B says, now that we killed Keystone XL, we're asking Canada to mine lithium, cobalt, and other metals because our green program doesn't want us to mine them here. So Doug, I'm not really sure that's true. And so put it this way, I have a very unpopular opinion about the Keystone pipeline that people don't really think about very often. I think it was a good thing to kill the Keystone pipeline. So I know people say, oh, what about the 10,000 jobs that it's going to create? 10,000 temporary jobs. Once it's completed, those jobs are gone. But here's the other thing. If you're in favor of building the Keystone pipeline, you're also in favor of forcibly taking private landowners' land away by means of eminent domain. Yes, you're going to give them what the government calls a fair price for that. But if they don't take that, they get that fair price anyway. So you either in favor of cutting 10,000 jobs, or you're in favor of seizing land from private individuals, seizing privately held land from individuals for the benefit of the corporation. We have millions of miles of pipelines to move to move natural gas. They wanted that done so they could save a few cents per cubic meter of gas, and that's all going to benefit a corporation and not you and I. I think that actually the political capital should be poured into new green energy technologies to break this energy oligarchy that controls a lot of our politics right now. And I think that was one step to it, a significant symbolic step. Like I said, this is not bound to be a popular opinion of any sort, but this is something that I thought about pretty heavily. The angle that wasn't covered was that this long pipeline was going to result in thousands of landowners having their land seized to benefit a corporation. So what impact do you think the transition from gasoline and lithium batteries will have on inflation? Gas prices always tight. So food and fuel prices are actually deliberately excluded from what we use to measure inflation here in the United States, which is the Consumer Price Index. And the reason is because both food and gas prices are so heavily connected to politics and to random events. So you could have a crop of something fail. It could be wheat in Ethiopia or wheat in Ukraine, and it causes the price to rise worldwide. Or you could have OPEC suddenly decide to cut back on production of oil, and it causes prices to rise worldwide. But then the OPEC suddenly decides they don't like each other, and they're going to outproduce each other, and the price drops like it did in February of 2020, down to almost nothing. Right? This is the reason why it's excluded, because it's just too volatile. What they're really looking at, two things you should look at, is the Consumer Price Index and the Producer Price Index to get a better handle on inflation. So what impact do I think the impact from transition from the gasoline to lithium batteries will have on inflation? Oddly enough, I think the transition to lithium batteries is probably going to have more of an impact on inflation than the transition away from gasoline, just because those lithium miners, their products are going to be consumed, are going to be. Yeah, I don't really know for a fact that they're going to be either on the CPI or the PPI. So I was thinking they were, but I'll be honest with you, I don't know that that's a fact. So I think it may actually have some effect. I just don't know what that's going to be right now. Let me see here. Have you ever looked into Canadian solar? Great stock going hard in storage aspects of Africa. I just want a contract there. Hey, I have not looked into Canadian solar. I really haven't. So yeah. Did you look into EHang? Is it real? I looked into EHang a little bit, and I'll be honest with you. I think if we're going to be banned from doing or from owning stocks that have anything to do with the Chinese military, I think that's probably going to be one of the first one that's banned. Okay, so but yeah, I'm not sure that it's real or not either. I was looking into it. It's hard. It takes me a while to find enough information on a new Chinese stock to be comfortable investing in it and thinking that it's real. Like, I have to talk to people that are actually over there. I have to really do hard research because, like I said, I've been burned so many times in the past. How low do we think Tesla would get before? Well, I mean, a real correction did take place. We were close to $900 per share, and then I grabbed a single share. Was it last Thursday, 2 Thursdays ago? I grabbed a single share at $540 a share. That's a giant friggin' drop in a couple of days, right? Or in a couple of weeks. Yeah, that's a huge drop. And I was so pissed off because I bought a single share in my HSA account because that's all the money that I had in that account. I had more money in another account. I got a phone call from one of my clients. I talked to him on the phone. Maybe 40 minutes later, I got distracted by something else, got back to my brokerage account, and the stock was already up to like $5.90 a share. So I missed that opportunity to grab a lot of like $5.40 a share. Yeah. How do you feel about the Lordstown electric truck? Man, I am so excited, not just about the Lordstown electric truck, but about electric trucks in general, that I find it hard to contain. This is, everyone talks about the Model 3 being the game changer. Man, it's not. The Ford F-150 has been the best-selling car for like 40 years running. And the 2 cars under that are best-selling cars in the United States have basically been trucks as well. If you want to if you want electric vehicles to take over the United States, you got to make a truck, right? So I'm looking at Lordstown. I think Rivian's truck is a lot more attractive because it looks like a truck, right? Lordstown truck is a lot more attractive than the Cybertruck because it looks like a truck. Although I'm buying a Cybertruck, let's be clear about that. But I do think Rivian's truck, Lordstown truck, is very, very exciting. And I even think that for some people, the new Canoe truck is going to be pretty interesting too. How far off do you think you are from fully autonomous cars? You know, I talked to someone on a Zoom call not too long ago, actually through my alumni group, who's a computer scientist, a well-known computer scientist. Actually, I don't know if he wants me to mention his name or not, but so I'm not going to do it. But he doesn't think that we're even close to like full like level 5 autonomy or actual like artificial intelligence. He doesn't even think we're close. And like I said, he's a PhD computer scientist, and that's what he thinks. So I'm not sure what to think about that when Tesla says that it's coming out later this year, and I have actual scientists saying that we're not even close. Any marijuana stocks that you like? I'll be honest with you, this is something that I know nothing about at all. Zero, zilch. I know that California is one of the first places to make weed legal, but it's just not something. I missed that whole boat when it comes to marijuana. Sorry, guys. I mean, like when it comes, doing or like smoking marijuana, investing in it, I've missed the whole boat. If I were to invest in that anyway, like a lot of technological revolutions, like in genomics, I have a lot of knowledge for a layman when it comes to genetics, but I choose to use an ETF to invest in that space because it's impossible for me to become an expert enough to evaluate whether or not this is a good investment based on what I know about the technology. I know a lot about financials. I know a lot about technical stuff, but I don't know enough about genetics to be an expert on these genomic companies. So I choose to do that through an ETF. Marijuana would be the same thing. If I really wanted to be overweighted in that sector right now, because there's going to be so many players. And here's the other thing. Once marijuana becomes completely legal, we can't really predict what's going to change about how how we grow it, right? That's one of the things I was thinking about when legal was like, oh, we can invest in all these like companies that make growing equipment. And then I started thinking, once it's legal, why wouldn't you just grow it in the sun, right? Like out in the open rather than, with hydroponics. Hydroponics and marijuana developed because it was illegal and you had to do it in the basement of someone's house using, artificial lighting. So my thing is like it's very hard for me to understand where that opportunity would be for marijuana. So I'm going to do that through an ETF. Let's see, what will the Federal Open Market Committee discuss on Wednesday? Things like, well, okay, Nicholas, the Fed always has an impact on the market. That's one of the reasons they're very, very careful about what they say. Jerome Powell seems to be a tiny bit less careful about what he says than a lot of other people do. But let's remember, this is an incredibly conservative organization. They have a target rate of inflation somewhere between 2 and 3%. They're saying 2% right now, and they do this for a variety of reasons, but mostly so imports to the United States get more expensive every year, and our exports get a little bit cheaper every year. This is why we have planned for inflation, right? One of the reasons we have planned for inflation. But it's a conservative organization. They're not going to do anything that's absolutely earth-shattering, but I think they're just going to announce that they're going to continue their bond buying program, and that's about it. If they decided to extend the moratorium on deposit requirements, to me, that would be the biggest surprise, and that would have I think that would have a bad effect on the market. I don't think that's going to happen though, but I think yeah. So Holistic Hottie says, what do you think about PACCAR for EV trucks? So I did a video on that not too long ago. Didn't get a ton of traffic on it on that video, but I'll be honest with you. I think that they could be in a better position to do really well, better than like Hyliion, certainly better than Nikola. They've really invested heavily in autonomous driving for trucks that are they partnered with Aurora. They have their own hybrid drivetrain already. They're working on a number of different types of drivetrains as well. So I'm actually pretty excited about PACCAR. And Kathy Wood made a huge investment through the ARC Innovation Fund in this company as well. So Teresina Matos, I assume you're Brazilian with a name like that, says, what do you think about Palantir? So here's the thing. So I got my professional start in IT. I worked for the oil industry where we started doing big data analytics kind of in early 2000s, kind of the beginning stages of it, right? Where we work things kind of the opposite way. Companies would come to us with a problem, and we figure out a way to query their databases to answer their questions, right? Now things are done a little bit differently, where they're collecting all of the data ahead of time and they're drawing conclusions ahead of time, right? So Palantir is not the only company operating in the space. They're not even close to the only company they're not even close to the only company operating in the space. I do think that people are falling in love with their story of secrecy and the possibility that they were involved in killing Osama bin Laden and a couple of other things. And then actually there was a huge negative event that they had with JP Morgan, where they had someone that was in charge of security using Palantir software who kind of went crazy and started spying on a bunch of like JP Morgan representatives, executives rather. And I think that all added to the mystique. And I think it's really hard to separate their actual financials from their mystique and the business they're actually doing from their sort of mysterious persona that they've managed to cultivate over the years. So I'm probably less excited than most people are. However, I do see that this is simply a growing industry, and a rising tide is going to lift all boats. But do I think that they're the next greatest thing? They're going to 30x and be worth $300 a share in the next year or so? I do not. They face a lot of competition, especially from really large players in the industry and from private competition, from like privately held companies that you have never heard of. A lot of them that exist here in San Diego or back on the East Coast that mostly serve military contracts. Like companies that I drive by and I'm not sure what they do. I go home and I look them up and figure out in San Diego, and I realize this is a company with 6 people in the office that's doing $200 million a year in business. So yeah. Can I look into EV infrastructure? Is the US ready? So it's, for one reason, it's probably more ready than a lot of other countries, just because 64% of people could already charge their car at home. And basically, if you can afford an EV right now, it's fairly likely that you can charge your car at home based on the way our economic stratification works here in the US. So Nicholas Morin says, I really hope that Nio will reach $60 before the next NASDAQ dip in the summer. Well, I don't know there's going to be a next NASDAQ dip in the summer. I will say that I don't expect spectacular growth out of the NASDAQ this year. I don't know if Nio will reach $600 by the summer, but I will tell you one thing. We're going to look back 5 years from now, and even $60 is going to look ridiculously cheap. Ridiculously cheap. So, yeah. So EV infrastructure, he's going to pick Xpeng. I don't know. What genomic ETF do you use? ARX. Yes, I use ARX, a genomic ETF fund. Maybe you've covered this before, but Nio versus Xpeng versus Li Auto, and Tommy Flanagan says he's going to pick Xpeng, and that's correct. I'm picking Xpeng right now, mostly for business reasons. I'll tell you that where I could be wrong though, and where I'm wrong frequently is looking at the power of brand. I'm one of those people that looks at technical specs for everything, and I don't give a crap about the brand, right? But I realize that for a lot of people, this is a very important consideration. Nio is absolutely kicking Xpeng's ass when it comes to creating brand cachet. They really are, and like I said before in this cast, their name tends to be exported better across other cultures than Xiaopeng does or Xpeng. So in terms of branding, that could be a really, really big mistake that they made by insisting on being called with the founder's last name. And anyway, so there are things that I like about Nio. There's some business things that I don't like about Nio, which is how they've accessed capital markets, how they had to give up on a factory build, how they kind of pretended like it was their idea all along to give up on that factory build when they were really forced to do it because of economic circumstances. But there's a lot of things I like about the company too. And the branding that they're doing, the way they've exploited the Chinese tendency to depend on connections. I mean, every society depends on connections, but in a 2,500-year-old bureaucratic society like China does, they depend on them quite a bit more. And your Nio center, your Nio houses, and all that have really exploited that, and they've created this cult brand there. So that's one thing that I could be vastly underestimating about Nio. Yeah. Okay, guys, it has been 2 hours, and once again, you guys know what's going on. I always stop these live streams once I start to get super, super hungry. Just want to remind you guys again that the super chat features were on if you are feeling so inclined. But I am going to end this here, and I wanted to thank everyone for showing up this time. And I wanted to say that I really enjoy doing these live streams. It's actually, I get a lot less nervous when I'm drinking a beer than a live stream. And Shoeless Joe says the cult branding of Nio reminds me of Apple a bit. Yeah, that's actually what I'm going for. Like, I totally missed the boat on Apple numerous times because I didn't understand the power of brand. And I could be wrong about a lot of things. So Star Peak and Clean Spark are both good. Those are things that that's on my list that I haven't had a chance to look at. But anyway, guys, and Claire, thank you so much for showing up today. I really enjoyed it. I will see you next time. Bye-bye.